for educational and informational purposes only. Consult a licensed broker or registered investment advisor before placing any trades. All securities and orders discussed are tracked and monitored in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Neither philstockworld.com, PSW, nor its affiliates, nor any of the respective officers. Personnel, representatives, agents, or independent contractors are in such capacities licensed financial advisors, registered investment advisors, and registered broker-dealers. Nothing contained in this webinar, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involve risk. Visit the OCC website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you to the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying a guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and results discussed in this webinar are not typical and are only valid on a specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone.
Okay. All right, let's see where we are. Yeah, speaking of, let's see how the market's doing. Speaking of not implying any profit, this is my oil trade at the moment. Now, I did not intend to do this. I intended to get back out. Wow, let's see. Today. Yesterday oil went down on me. I moved up to 4 contracts when it was down here, and my average was about 46.75, let's say. I should have gotten out when it got up here this morning. All right, but I didn't. I got busy and I started making some phone calls and talking to people, and I did not get out. So now what happened is, instead of having 2 contracts like I should have had, and then watching it drop, I had 4 contracts as it dropped, and so I went to 6, and then I went to 8, and then I went to 10 down here. So now I have 10 contracts at just under 46.50 right here. So, to start with, first trade of the webinar, yes, I love this oil trade above the 46 line, but as a new person, you want to have tight stops below 46. Don't be an idiot like me and end up with 10 contracts you didn't mean to, because I'm down like $4,400 at the moment on this total trade. I would have been thrilled with my position had I gotten back to 2 like I was supposed to, but that's the problem with futures. It's like you really... Now, I don't mind having a decent-sized position, but you really, if you can't afford the losses, you cannot afford to walk away from the screen at all with futures. And I was busy and doing phone calls, just like these webinars. I get busy on the webinar and I lose money because I'm not paying attention. You've got to be on top of these things because they move like lightning. Now, we'll see how that trade goes along, but I do like the oil bullish up here. I'm going to get back down. I'm going to get back to 2 contracts, though, when it gets back to 46.50. And I'm going to be very happy because that means my basis is way lower than I thought it was going to be. And then we'll see what happens into the weekend. But at 46.50, I'm willing to be a pretty long-term holder of oil at that price. I think it's a decent price for now. Certainly into the holiday weekend, but also possibly even longer than that. I'm not expecting anything great in October, but I just think this is a bit of an overcorrection at the moment. And as the hurricane stuff calms down, just like the stock market came back real hard and fast today, so will other things settle back to normal prices. And, really the stock market is back. The stock market wasn't down because of the hurricane. The stock market was down because of North Korea. And North Korea, and then because North Korea, everybody thought Trump was going to say something crazy today. He hasn't said anything crazy all day that I know of. So it's a relief rally based on Trump not escalating this thing out of control in 5 minutes. That's key. Oh, look at that. It's going up already. I'm very happy. All right. So we'll see how that goes. Now, since there was no reason for the rally, there was no reason for the downturn other than North Korea firing a missile. I mean, the hurricane doesn't cause the market to go down. If anything, as I said yesterday, it's a Keynesian thing. It's actually positive for the GDP because stuff gets broken, and then to fix stuff costs money, and that's money that people will borrow. It creates an economy, right? Insurance companies take cash that's sitting there in their accounts. They give it to people who take it to Home Depot, who spend it, and then they hire workmen who come in and fix stuff. So a big boost to the economy on a pretty wide area. So it's actually fairly good for GDP, and we noticed a few retailers are going way up, Lumber Liquidators, things like that. Because they have to, think about how many people have to replace their flooring and things from damage. And it's no small thing because Lumber Liquidators spent 10 years selling flooring to people in Texas, and then all of a sudden, in one quarter, all those people need flooring again. And even if only half of them go back to Lumber Liquidators to replace their flooring, there you go. That's a lot of business. So you think of the impact on certain individual businesses when something like that happens, it's actually really big. Now other businesses are shut down, and that's bad. But, and again, it goes back to a business like Lumber Liquidators. If they're shut down for 5 days, all it is some now they may have had damage, but that's insured of their stuff. But if they're shut down for 5 days, it doesn't really kill them, and there's nothing compared to how many orders come pouring in from people who are repairing storm damage. That would go for like roofing companies and things like that. There's all kinds of things you can think of that would make money in a situation like that. So the dip we had this morning was basically all about North Korea. That's what really caused the problem. And, I'm sorry, about oil. So I said earlier yesterday, oil bottomed out at 12, and today oil bottomed out at 11:30. And after that, at about 2 o'clock, we started going higher, and here we are again, 2 o'clock going higher. So it's really the same old program. Look at the spike, right? Here's a little spike, here's a little spike, and it's probably going to level off a bit, and then as long as I get back to around 46.50, I'm going to be one happy camper. While we're talking, what were we down? $6,000 or $5,000? So we picked up $2,500 while we were talking about this on 10 contracts. So that's how fast the money moves in this sort of thing. So like I said, I hadn't intended to have 10 contracts, but the way I was playing it, I kind of fell into the position. But I wasn't looking to have this gigantic bet because of the hurricane makes everything so crazy. It's hard to be sure. But I was willing to say, just when you guys came in, I was certainly willing to say that I think 46 is too low. Excuse me, I'm heat. Let's see what else. Let's look at the general markets. The other. So there's our shorting line on the Dow, 21,850. Happens to be a resistance point today. So we'd love to go short there right now. 2450 on the S&P. That's not as likely to get hit as the Dow. 5866 on the NASDAQ was not our line. I forget what our line is now. Where'd my thing go? Let's see. I wrote it down this morning. So that's 2450 and 5850. That's not going to happen. All right. Yep. So 5850, we're already over on the NASDAQ. But now, oh, by the way, sorry. So intraday, though, we should make an adjustment. If he's at his pink line and he's at his red line, and I got to use the red line on the NASDAQ. We're already over the pink, so I'm going to use the red line, which is 5865, and make sure that holds under. And here, the Russell's always a crazy index. Now, since the Russell is the highest, though, it's the furthest up in its channel, that's the one I want to short. But the problem is, where do I want to short it? If I can see that the S&P, the most important index because of the size and volume is the S&P. If the S&P shows me it's going to stop at the pink line, then I know that this is too far. I know the Russell's gone too far. If the NASDAQ stops, I want to see the S&P turn here and the NASDAQ turns here, and then I want to short the Russell. But I can tell you right now, I can see it. They're slowing so much, I really want to start the short. So TF, we're going to short. That's the Russell futures, and they're right here. So let's just take a couple. The Russell futures used to be $10 a contract, and now they're $5. I'm already up 2,000 on the day, so keep track of that. The Russell, here we go. Oh, damn it. Missed it. Pissed off. No, damn it. Let's try it again. Oh, coming back up. 9 to 5 means it's heading that way, not 11 to 9. As long as this is positive, it'd be silly for me to try to buy over here. Yep, there you go, 15.50. Now it's getting even. 17.15. Okay, so now I see, you see that? Now that I see a little selling pressure where this number is bigger than that number, I can see the direction might be changing. Although the point of contention seems to be right where I'm selling, right there. So let's see what happens. So I say the Russell used to be $5 a point. They changed it and made it. I'm getting off my screen on the other computer. Okay. They used to be $10 a point. They made it $5 a point. So now I always buy 2 contracts, so I get back to $10 a point because it's kind of annoying to me. I just like tracking it the old way. It's much easier for me to sit there and watch it. So that's where we are now. We got the short on the Russell, then we still have the long on oil. Now, by the way, if you guys made a quick $150 here, I would take that off the table. You know, when you make $150 in 10 minutes, take it off the table. Don't sit there and get greedy. You know, especially if you bought 2 contracts, take 1 off the table. I would rather in the futures, and especially when you're starting out. I mean, how do you say this nicely? Look, I play, poker. I play craps. I play poker. I'll put $500 into a pot. I play craps. I'll have $1,000 on the table. So if I lose $2,000 trading a futures contract, it doesn't make or break my day. You have to know what level you're playing at. Okay, that's really important. So but when I was starting out, especially, and I was much more, and I wasn't trading with conviction. When you're playing just to make quick trades in the futures, you want to I'd rather take 150 off the table 10 times to make $1,000 or $1,500 than sit there and try to work 1 trade to make $1,000. It's so much easier to make $150 10 times than to make $1,000 once in the future. Because you get so many times it's going to move a little bit in your direction. Like this thing just went, like $100 in our direction, like in 10 seconds. All right? And like the oil trade went straight in our direction. So take that money. As soon as it slows down, go, great, I'm out. All right? For me, I just want to see what's going to happen, but I don't want you to pick up a bad habit from watching me do stuff. The best way to trade is the quick in and out trades. So we start out, don't forget, I'm behind in oil, or I certainly would have been thrilled to make what we just made. On 10 contracts, I should have been absolutely thrilled to make what we just made. On the Russell, on 2 contracts, obviously I'm already up 2,000. I'm not that concerned. But I think we're going to get a better pullback than this. I think we should test 1380 again, which would be good for $500. All right, so basically a little bit under 2,500 is my goal here. But, I'll show you some other trades that we do from scratch with a clean slate, if I can find a clean slate. This is gasoline. I'm done with them. So let's take a look at something else to trade. Like, let's see how the Dow's looking. Nope, see, they failed, which is what we wanted to see. So now we'll look at the S&P. See, and they failed also at that line. So as long as they failed and they keep going down, I'm going to hang on to my Russell trade. But as soon as one of them ticks against us, I'm going to get out of this trade and take the money. I want to see all the indexes falling. My premise is the other indexes were going to fail, and the Russell would follow them down. So the other indexes failed a little bit so far, but that failure could be a tiny little pullback that gets erased real quickly. And then the Russell will pop back up. So what do I want to lose the money I made? See, and here's where I get in trouble, though, because then I turn to answering questions, and all of a sudden I'm not paying attention. That's the dangerous part of this game. And this is an example of what you should never do. Never give a webinar while you're trading and answer questions and get distracted. Let's get that perfectly clear, because I keep you out of my competition. Like, don't do what I do here. All right, so what's up? Who's got questions? Under audio options, I have to select listen only. I don't mean. Oh, I do have that option. You can select. I guess you can listen. I guess listen only is probably the right thing to do. I turn off. I mute everybody's mic so nobody can talk anyway. Otherwise, you hear everybody's like little scratchies and whatever they're doing on the desk. Oh, Valero. Thanks for reminding me, Laura. Okay. No, where do we have that in the butterfly? We were intending to take advantage of that Valero move. You are totally correct. So Valero had a huge pop. What is this? Ugh. Chart. Gallery view. Come on. Doesn't maintain your preference. So we had a really nice pop here. We tested 70, and that's actually when we should have sold. But yes, in the butterfly portfolio, Valero, we have uncovered. Well, wait a minute. Oh, I'm sorry. This doesn't reflect the changes. Ugh, what a hassle. All right, hang on. Here's the portfolio review. I didn't make the changes in the portfolios yet because it's such a freaking hassle. ELO. You know, it's summer, so every weekend the kids want to do something, and I'm like, I don't want to deprive them, so I don't get my stuff done. Though it's better in wintertime. So I really have to get this done. We got a nice pullback with about a 15 short 67.50 calls. That was a good move. We bought back the 15 short calls, very smart, and we bought back the long calls. Holy crap! And we sold more puts. Wow, that was freaking brilliant. When was this? What date did I do that? August 18th. I made that call. Boy, nice. Okay. So on August 18th. Oh, right there. We got super aggressively bullish. We bought back. Wait. Wow. I'm really proud of myself. That's amazing. I called the bottom on the day it hit the bottom, and we bought back these short calls at a much lower price. We bought back these short calls at a much lower price. And now we still have these calls, and now we need to resell calls. Now, here's the question. Where do we think Valero is going to be? I would sell, where's our long position? Our long is a 60 call. What do we really think Valero is going to do, though? I think 70 is about where they should be. So I would sell the 2019 70 calls. Let's make that an official move. So I would sell the 2019 $70 calls, VLO. Let's see what those are going for. And not I would. This is official for the butterfly portfolio. We'll sell the 70 calls at it says 638 there. Don't know if you can still get that. But let's say about obviously you can't. Let's say 620. I think you should probably get it, or at least 610. But so we sell those for $6. Fantastic. We lock in all the gains on the 60s. We already sold the put, so we're good there. And we should also sell half. That would be 10 of the October. Oof. 67.50s, I think. Yeah. All right. So we sell half, 10 October, 67.50 calls. That puts $2,500 in our pocket. Okay. We sell 20 full cover of the 2019 70 calls. So we have a $10 spread that we're covering the short. We have 20 of the $10 spreads that will be covering the short call. So that's official, and let's write that down. So hang on. Where are we? Here we go. And I'm going to say V up. Slash here covering with the 2019 $70 calls, right? 70 calls at 6 plus and selling 1/2 10 of the October dollar, the 67.50 calls for 250. So this is the joy of the butterfly portfolio, because look at how much money we're collecting. And we're collecting $12,000 here, and we're selling these for $2,500. That's $14,500 that we're going to collect. And let's see how much this position, and how much did this position cost us? The position cost us 22 minus 11 minus 6, 22 minus 12 minus 18, so about $4,700. We only spent $4,700 on the position in the first place. When we bought back the puts and calls that were short, we spent $9,000. So that's $13,000 is how much we spent on the long position. Okay, so it's 9, so it was $4,500 or whatever it was, plus 9, so that's about $13,500 total. Oh no, I'm sorry, we sold the puts. Sorry, bad math. 10, here it is. We bought these two back, 46.50 and 6, and then sold 3. So that's really 31 plus 47 is 70, 750. 750 plus the original. No, it's making it confusing. So it's net 77.50 net plus the original net, which was 22 minus 12. We said is 22 minus 18, 19. No, 22 minus 18, let's say, is 6. So about 13,000 was the total original position. And now, in just this one sale, we're netting back, what did we just say? We're netting back 12,000 plus 2,500, 14,500. So now we're ahead of the game. We can't lose money anymore on Valero. We've covered the calls, and now we're collecting. So we have a free spread that in October we're collecting $2,500 again. And we've got November, December, January. So there's 15 more months to sell after that. So everything we sell, this is the whole goal of the butterfly portfolio. Get your main position paid off, and then for 15 more months, and of course we're going to roll our position after 15 months. But for the next 15 months, every single dime we make is 100% profit on the butterfly. And not only that, but I'm sure we still put some calls we made money on before this. But that's really the whole essence of the butterfly portfolio. Get the basis of your position to 0, and then just sell your puts and calls against it and make your monthly money. Very simple. And that's why you see such a dramatic increase in how much money we make in our portfolios as time goes on. Because as the positions pay themselves off, the net basis of the position is 0, which means the money has all dropped back to cash in the portfolio, right? Because your basis is 0. So you still have the stock, you got the cash back, and now every month you're collecting this money. That's why the butterfly portfolio it's a $328,000 portfolio now. We started with $100, and it's got $307,000 in cash. And we don't need, we have obligations to buy stuff from the short puts, but we don't care. That's what our cash is for. In fact, this one uses very little margin. We're only using Margin requirement, $145,000. So with a $328,000, we should have a $650-something thousand in margin, ordinary margin. But even if we had an IRA account, we could run this portfolio. So this is running IRA margin. And even if we had an IRA account, we could do this, and we're pulling in incredible amounts of money every month off our positions. At this point now, if we don't make, if you don't make $10,000 a month, we're actually not even having a good month. And that's starting with $100,000 4 years ago. But it's like, unfortunately, it's incredibly boring. There's mostly nothing to do. We set that position we set that up, and 2 months from now we'll make another move, and 2 months from then we'll make another move. It's a very slow process, but the money is exciting. And you got to learn to trade like that. You got to learn to trade to make the money, not to worry about, every month looking at your thing. You have to realize, and we talk about, there's a thing called the man who planted trees. If you Google it, the man who planted trees. I always try to get our members to watch this movie right here, The Man Who Planted Trees. It's a cartoony thing. You have to watch it and think about trading, and then watch it and think about trading until you get it. And the movie's slow and quiet and nice and relaxing, and you just have to get into this concept of, this is how you should be trading. Because that's what we do. We basically put down these positions that over time will start creating money for us. And we have to take care of them when they're young. We have to take care of them, and we have to tend to them, and we have to steadily build our portfolio of trees. But once you have a portfolio full of mature trees where you paid them off, and now they're just sitting there, you're just picking fruit for the rest of your life. That's it. Very little maintenance once you have a full-grown tree, right? I mean, people who have any kind of fruit trees know this kind of stuff. It's hard to grow them, but once they're nice and big and they're a decent size, they're fine. They can stand up to a storm. They can take anything, and that's what happens when you have a portfolio full of good stocks that pay off all the time, especially dividend stocks. You just keep collecting money for the rest of your life, but you're not going to get there if you just have this day trading mentality. It's a whole different concept to buy long-term stocks and push them like this. But it's something I really want you guys to get into. I mean, at this point, the reason we kept these portfolios open for the last few years is because I felt that our old system where we would close the portfolios every time they doubled, it wasn't teaching anybody anything because all we were doing was essentially the quick trade. And what I want to teach people is the better system of doing the slower trades. It's all fun and exciting to make a lot of money on quick trades, but the idea isn't to be exciting. The idea is to invest and make money over your whole life, not just to have this quick thing. What's exciting? It's exciting that I went away for 2 weeks to Europe this summer. I came back and the portfolios made a ton of money without being touched. That's exciting. That I'm paying zero attention, to the markets pretty much for, well, I wasn't really, I was talking to you guys, but I was saying, I wasn't worrying about the portfolios, I wasn't putting in new positions, I wasn't playing with anything. Don't have to. You can live your life and make money. That's exciting. Get your head out of this thing. Look, the markets are my favorite thing. I love stocks. I love the market. It's all fun and I love this kind of stuff. So if I can't retire, this is what I want to do when I retire. But I don't want to work all the time either. Which is why, by the way, next year we're not going to do Mondays anymore because I'm going to retire from Mondays, and 5 years later I'm going to retire from Fridays, and the only time I work is Tuesday, Wednesday, Thursday. But that I think I can maintain. When I'm down to Tuesday, Wednesday, and Thursday, and I'll be 60 years old by then, I think I can maintain that into my retirement. Because I have 3 days a week. I can manage 3 days a week, and who the hell has anything to do on Tuesday, Wednesday, and Thursday anyway? But to get there, if you think that sounds good, let me teach you how to get there. Stop messing around and start thinking about what you're going to do for the rest of your life, not like right now. And I'm talking to the people who only have a little bit of money too. Because I know people think it doesn't apply to them if they don't have $100,000, if they only have $50,000. Like, that doesn't apply to them. Yes, it does. Because building money over time It's just a question when you start. Now, if you're 60 years old and you're retiring and you only have $50,000, you're in trouble. But compound rate calculator. Okay. There you go. So, if you're starting with $50,000 and you go 20 years and you make 20% a year consistently, running our system, not hard to do. That's $2 million. Just starting with $50,000. All right? And again, if you only have $50,000, what you need to do is get a job, not sit around trading. So start from there. But it's not that hard to build wealth if you do it consistently. And we've been averaging 40% for these portfolios going on 4 years now. If you're at 40%, and of course it's a weird, silly market that's not going to keep going like this forever. And this is why. Look, 50,000 turns into $41 million in 20 years. And that's just at the rate we're going. In fact, when was it? Oh, in the portfolio review, I had a chart of this, and I was talking about why this can't possibly keep happening. You have to. Here you go. Look, I use this chart. This is just 10 years. Okay, so we started with $600,000. That's what it was. We started with $600,000 in the long and short-term portfolio, and using $600,000, making what we're making 40% a year. This is where we are. We're in year 4, and we're right on track on our long and short-term portfolios to hit $2.3 million. We're averaging 40% a year. It doesn't seem exciting, right? Because here you start out with $600,000 and you get to $840 at the end of the year, and you say, well, then you didn't double your money, you didn't get a 50% bump in your money. So we're not going for those exciting trades. We're just steadily trying to make a profit. And again, it's a very bullish market. This is not normal. Normal is 20%. This is crazy. But as long as it keeps going, we'll take it, right? We were on track here. We were on track that year. We were on track last year, and we're on track this year. So we're doing exactly what we planned to do. But the weird thing is it can't keep going because, again, in just 10 years, we'll have $17 million. That's stupid. Right now, we have $2 million. We're going to get $15 more million in 6 more years at 40% a year because the amount of money that we make starts escalating. But that makes no sense. How could that happen? Where is all this money going to come from? It's not coming from an expanding economy. It's coming from other people. There's losers on the other side of these trades. It's not a net positive. It's not a situation that can sustain itself because the richer we get, the poorer other people get because there's no growth. You have to have growth to make this kind of money and feel good about it. So, despite, when you're doing good, you have to say to yourself, am I doing too good? And that's why we've pushed a lot of hedging. Okay, and by the way, I'll talk about hedging. Where's the short-term portfolio? STP. So the short-term portfolio was at $493,840. This is on August 15th, which is what, a week ago, right? It's like, 2 weeks. Okay, 2 weeks. So 2 weeks ago, $493,840. This is the one where we have our hedges. And remember, I haven't made any adjustments yet. These are without the adjustments. But we went from $493 to $513, $20,000 in 2 weeks. And again, this was also a $100,000 portfolio when it started. So it's 20% gain in the portfolio in 2 weeks. Because we're aggressively short, the market turned down because this is where our hedges are. And frankly, we actually did better because we adjusted our hedges more aggressively in the thing here. What do we do? Let's see what we were supposed to have done. Apple. Oh no. We killed Apple actually. Oh wow. See, we killed Apple. That was good. Leibu, we got more aggressive on Leibu, and that did fantastic. What happened to Leibu since we got more aggressive? SQQ, yeah, see, we added SQQ, so that's going to be a better move. And TVA, we added to TVA the hedges. So the hedges were perfect. Look at what TVA's done since we made the change. Oh, wait, that's not good. I'm sorry. We made the change. It's up for. I know it's up from the change. So we must have made the change over here, and it went up and then back down, but it's still up a bit. And SQQ is just sort of drifting along. But both of them are up from where we were, and they made good money. So we increased our hedges and made more money. And the long-term portfolio was only at 1466. And check this out. Again, it's the same 2 weeks. Dun, 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 dun. There it is. So what was it? 1466? 1540. That's crazy. All right. So why is that? That's because some of these positions, we sold a lot of premium, and a lot of things flattened out, and we pulled in a lot of cash from some of the positions we sold. Now I have to put the adjustments in here too. But the bottom line is, you're making huge gains here in just a couple of weeks, because now the market normalized a bit to be where we thought it should be. So we're getting more on target with stuff. But the point is, we can afford to hedge, and we did. We added that, exactly what we did. We hedged to lock in those gains, but it doesn't stop us from making more money. It just makes us even more comfortable and more relaxed, and it gives us a better opportunity to use our cash when the market drops and pick up other stuff. And we have picked up some new trades since then. Let's see. Where are we? All right, so good call, learner. We got up on the whole thing there. CSIQ, your last update on WOW? You exited positions, but the portfolio still shows you have 10. If we said we were exiting, we exited. Sometimes I forget to update the portfolio. So that would go back to if we said we exited it, we exited it. Don't go by what it said on the portfolio. And especially, wait a minute. Especially if this was the portfolio, CSIQ. Oh no, we cashed it. No, we cashed in as of when we did the review, it was in the portfolio, and then I said let's cash it out. And we cashed it out because we have, look at these gains. I mean, we cashed it out because we had these huge gains, and we weren't confident that it was going to continue. Let's see if it did. It seemed like a little choppy to me. And that was like, yeah, there you go. So you came back down a bit. So I just, again, I actually felt bad that I meant to cash it out. What is that? Oh, that's daily. Okay. I meant to cash it out when it hit 18, but I kind of forgot. And by the time we did it, it was like 1750. But I certainly want to get it off the table. So yeah, it goes back to the same thing I just said though. When you make money, you have to say, did I make too much money? Was this silly? Just because you thought you would make money, if you make a ridiculous amount of money, you have to say to yourself, gosh, maybe I should cash that in because it made a lot more than I thought. It's not always a good thing. You have to say this is not sustainable. Like Apple, goes up from a $500 billion company to a $750 billion company. And you say to yourself, is this thing going to be a $1 trillion company? And where will the $250 billion come from? And if the economy isn't drastically expanding, you have to think about other things. Like you have to say, well, Apple is like 15% of Apple's at least 10%. It's probably more like 15% of the Nasdaq. So if Apple is 15% of the Nasdaq, or let's say 12.5% to split hairs. So if it goes up, the entire Nasdaq has to go up. And it's not just Apple that needs $250 billion to come from somewhere. The entire Nasdaq has to pull in, I'm going to guess. I'll say the Nasdaq's probably capped at $20 billion. So let's say the Nasdaq would have to pull in, $20 trillion. So the Nasdaq would have to go up at least. If Apple's going up 33% more, the Nasdaq would have to go up at least 15% more, which would be another $3 trillion. And you got to say to yourself, where the frick is that money going to come from? Who's got $3 trillion to push into the market? Nobody. You're past the limit of credulity. And you've got to say to yourself, this cannot be sustained. And that's my whole logic on the rally now. We have passed the vanishing point. Just like I said about this chart on in the portfolio review. Okay? So when we throw our 600,000 on the table, can we get 240? Sure, 240 is gettable. 330? Yeah, sure. 470? Yeah, I guess so. $600,000. This year, we made more money than we started with. We started with $600,000 in the long and short-term portfolio combined. We made this year. We're making more than $600,000. 100% gain from our original investment in 1 year. Next year, we will make 150%. The year after that, 200%. Then 300%. Then it gets faster and faster. Then 400 and something percent. 600%. So is this realistic? Let's say you bet your house. Are there resources on the planet for you to get a half a house? Let's say you have a $600,000 house, half a house. Next year they give you another half a house. Here's 3/4 of a house. Then a whole house this year, house and a half, 2 houses, 3 more houses. These are more all the time. More houses, 3 more houses, 5 more houses, 4 more houses, 6 more houses, and whatever that number is, 7, 8 more houses. 8 more houses. So now you've got, 30 houses in 10 years. Every year, people are building you 3 houses a year on the average. Is that realistic? Because you bet one house? No, it's ridiculous. It's got to stop. Because what if everybody was playing the market, and everybody is kind of playing the market, right? Everybody's getting into it. If everyone's playing the market, are we all going to be billionaires? Is that how it works? No, because if that happens, then that would mean inflation would go out of control, and then the money you make would be worthless anyway. It'd be like Venezuela. Of course, everybody in Venezuela has a $1 billion stock portfolio. It just isn't worth, or $1 billion peso stock portfolio. It just isn't worth anything. Just like where was it? Zimbabwe. Zimbabwe had they had dollars. They had Zimbabwe dollars, but they literally had $1 trillion bills. Because inflation was so out of control, they had $1 trillion bills, and you couldn't even freaking buy bread with it. So yeah, you can have this kind of rate of expansion, but not without inflation. Something has to give. And that's why we have to have some hedges, because something will break. Either the market will break, or inflation will break, which is why we have inflation hedges. But you've got to plan for that. You can't just sit there and think that the money you're making in a portfolio is going to sustain the kind of rate it's making now. It can't. It just really can't. Something will break. And that's why it's a bubble. You reach a point where it's going to pop. It just can't keep going. It seems like it can keep going. It can go a lot further than you think. You can see some really big bubbles sometimes. But the bigger they are, the more fragile they are, right? And you have to really keep that in mind. And you have to protect yourself. Because what's the point of having all this money on paper if it all disappears? Still good company service says you exit for 30% gains. Wait, what? Are you talking about CSIQ? We exited because it was done and it was good enough. That's why. Do we get 20% off next year? I won't increase rates by 20%, I'll tell you that much. But no, that is what's going to happen. Instead of doing rate increases, we're going to cut back on the service, basically. So, but you know what? Well, first of all, I'm not going to take every Monday off. I'm just generally as a rule of thumb, I'm going to take no more Mondays. If anything happens, unless I'm incredibly busy doing something, I will start working if something happens. So people are still going to be able to come and chat and talk. I may still write up a post on Monday. I don't really know. But bottom line is I reserve the right to not work Mondays. And I'm sure the more it goes on, the more I won't. Because you know how it is. You can have Mondays off. You don't always every time take a vacation and do something. And I'm also not really taking off. We have PSW investments, and I'm putting more time into PSW investments. And I figure if I could say Mondays are going to be my meeting days when I can actually go see people during the week, that's going to be a big help. Because I can't, like, right now I make everybody meet me for, like, late night dinners and weekends and stuff like that. And I can't keep doing that. I have to at some point start working during the week and meeting people. How's he feeling about the CL position, the 60? Oh, what happened to my wife? How's he doing? Oh, okay, 46. Wow. I forgot all about it. See, this is why you should never do this. Up. Now, meanwhile, we hit this red line, and the indexes aren't falling anymore, so we should cash this out and take the money, $220. So let's not sell. Whoops. We're going to buy, and there you go. We made $200. Fantastic. All right. Oil. Well, I don't understand the question. It depends on when you asked it, I guess. Oil's doing good, so I'm very happy right now, and we'll see if we can hit my goal of $46.50 by the close. But that's what I mean. I'm thrilled. I know it seems weird because I just made $2,000 earlier, but I'm thrilled to make $200. That's how I made $2,000. I'm so happy just to make a couple of $100 on a little trade like that. It's just fun, and it pays for lunch. You know, that's why I like it. Like, pays for lunch, pays for dinner. You know, that's my goal. It's always good to have a goal when you trade. Even when I was young, when we were in college, we would go to the casinos, and my friend Jim and I, we would always play, and our whole goal was to we played with like $100 maybe we had, and we were either going to get a good dinner or a crappy dinner. So if we lost $100, we'd go get a crappy, we go have a takeout, McDonald's or something like that. But if we won, we'd go to a nice restaurant and eat for free because we won the money. And that was always a goal. So we'd play until we either lost the money or won enough to get a good dinner, and we'd walk away. And it's really good to have a reasonably achievable goal when you're making bets. And another thing I want to teach more about next year especially is I want to get more into the concept of something that we like to do, which is when you win in your short-term portfolio, your goal is to take money and put it into the long-term portfolio. That's your goal. In other words, those nice, boring tree planting trades that I like to have for retirement, when you have a nice win in the short term, you take that money, put it in the long-term portfolio. That way you're building up the amount of steady. Oh, I'll show you why that's important. Watch this incredibly cool thing. So let's go back to 20%. All right? And wah goes down to that. So step number one, make sure you make 40% instead of 20%. All right, but if you're only making 20%, here's what you do. Add $5,000 a year. And watch what that does. $1.9 million, and it's over 20 years, $50,000, making 20%. If you don't add money, you're going to get $2 million. If you do add $5,000 a year, $3 million. Okay, you get an extra $1 million by putting away $100,000 more dollars. There is nothing more important than saving money and putting it into long-term, safe, compounding investments. That's how you make real money. And I tell my friends this all the time. People ask me about, buying houses and things like that. I'm always like, if it's cutting into your ability to put money away, don't buy it. You should be saving 10 to 20% of your income. The closer you can get to saving 20% of your income, the more likely that you're going to be able to collect that income after you retire. But, and again, assuming you've got 20 years. Because what happens here? If you have $50,000, even $50,000, you put away 1 year's salary. If you make $50,000 a year, if you put 1 year's salary into an account for 20 years, and you add another 10% of your salary every year for 20 years, in 20 years you'll have $3 million. If you continue to make 20% of that, that's going to be $60,000 a year. I'm sorry, not 60,000, 600,000 a year. Sorry. If you retire all right, but again, even if you safely put the money into something that makes 10% or 8%, 8% is $250,000 a year. You can have much more money when you retire. So it's easy to have a very good salary when you retire and be rich for the rest of your life after you sacrifice up front. But if you don't do the sacrifice up front, it makes it much harder to meet your needs and have the interest and take out the money and do the things you want to do. You know, and I have a video for that. I forget what that video is. I think it's How to Get Rich Slowly. And on the video, we explain that also. We talk about, like, you literally don't think about it, but when you buy a $5 coffee at Starbucks, it costs you like $3,000 out of your retirement. Every time you buy a $5 cup of coffee, instead of putting that money into your retirement account, $3,000 out the window. So when you're 60, you think back on all those cups of coffee you had, and think of them as being $3,000 a piece. I say to my daughter Jackie too, because she got a Starbucks card. I'm like, do you realize how much money you're spending on this crap? Doesn't matter though. Kids. So how am I feeling about oil? I feel about oil because the weekend, we're coming into a holiday. I really, really think it's going to bounce. I think the hurricane fear is a bit overdone. Thank goodness. Now, at this point, though, I don't want to lose this money. I'm so freaking happy not to be down $5,000-6,000. I'm going to try to lock this in. You know, it's like I'd be an idiot to let this go below 30. So I'm going to certainly want to start cutting back here. You know, I wanted to see it go to 50, but just because I wanted it to go to 50 doesn't mean it will. You know, but here we are. It's only 2 o'clock. The NYMEX closes at 2:35, and we seem to be heading up into the close. So maybe I'm going to get lucky. But it was never my intention to risk this much money. But see, that was a big number. See, at 104, that made me happy. There's a 104 down here, and that means there's a big buyer down here. So until he, see there, 97, until he goes away, oh, wow. Until he goes away, it's safe. But he went away, and people are selling. So I should cut back and be thrilled right here. 84, I don't like that. See that? See these imbalances? That's what you want to watch. Where's the pressure? I'm going to start cutting back. 1, 2. Whoop. Up. Here's Mr. 70. Let's see if he saves me. Yep. Even. Oh. Nope. Don't like 92. Up. Knew that. All right. Here's the bone of contention right here. 93. See? We're right between those two guys. I cut back to 4, 5. All right. So now I've cut back half. All right, I'm still down a bit, but I'm down a reasonable amount that I don't mind. I'm like down I'm down $1,000, $1,500. I can easily make that. If 5 contracts go up 30 cents, I'm going to be $1,500 back. Now, the problem is when you do this, you have to keep track in your head because this thing says I'm open. It's my 5 contracts I have now are profitable, but they're not really because I sold 5 that were not profitable. So you have to know in your own head how much money you need to get even. So I still need that same. Now that I sold under my goal, I sold 17 cents under my goal, I have to get 17 cents over my goal. I have to get to 67 now to break even on the rest. So my new break even is 67, but I will be thrilled to get out, even with the $1,500 loss after being down $5,000, because I made much more than that on other stuff. You don't have to always get even in one shot. You know, it's like I lost $1,500, not a big deal at all. I can make $1,500 anytime I want to. But you know, if I lose $6,000, I probably have to trade for a week to make back $6,000. That's crazy. So that's how I feel about the oil position. Thanks for reminding me, though. Hang on. Let me get this screensaver. I told it to stop being a screensaver, but it doesn't listen to me. It keeps like turning itself off. So I want to keep some kind of eye on that before. If it goes below 25, I think I should just get out. And not that I won't get back in, but I'll just wait for it to see how low it goes and then jump back in. But I'm going to work it back now with a normal amount of contracts and just make a few $100 a time until I get even, and I'll be happy. I see. So don't rely on the OOP portfolio screenshot you gave us. No, the screenshot was from the time that we did that. Wait, the screenshot was accurate as of the day that we made the changes, but then we make the changes. The screenshot doesn't change. So then we make the changes. That will be reflected in the next update. All right, but it takes a long time to change. It takes me a long time to do that, so I don't do it every day. How about SunPower? I like SunPower. How are they doing that? I mean, I like them in general. PWR. Ooh, coffee's coming back down. That's a good trade, too. I like them here. I mean, I think they're fine. I think they should hold that, $8. So they're good. Now, if oil's coming down, if oil's crashing, then solar is going to go out of favor a bit. You've got Trump, of course, is not putting money into renewable energy. Although California just did a solid for Tesla on self-driving cars. They're going to really increase their self-driving on electric cars. So I don't think Tesla went up today, but California just did a really good thing for Tesla. Well, it did go up a little bit. I don't want to say the exact number, but I mean I know they massively increased the amount of rebates they'll give people who buy electric cars. So it'll last longer and be a lot more cars, which is great for Tesla, of course, and any electric car producer. I imagine if they're doing that, they'll probably do something similar with solar energy, so on and so forth. So those things are good for companies like SunPower, and I like SunPower. They're one of my favorites. So they're a long-term, steady producer. I'm into them. Now, if you want to make a trade on SunPower, let's take a look. He's holding steady. Okay. Oh, meanwhile, let's take a quick look at the chart. See, everybody's still stuck, but I want to see him break below that line before I jump on anybody else. And I think I'd want to take the Dow. Is probably a fairly clean short, so maybe short the Dow if we get a chance. That's my next target. And what we talking about? SunPower. SPWR. So at $9, we said 8 is good, and hopefully they'll get to 10. But that means I would want to sell like something. Oh, look at that! I mean, Jesus Christ. All right, there's two ways to look at this. I could sell the $10 puts for $3.30 here, and that nets you in for $6.70. That's pretty low. You could do that and not do anything else. See, if you sell those, in fact, we're going to do that in the long-term portfolio. I don't think we have them in the long. Do we have them in the long-term portfolio? If we sell, because we need more longs in the long-term portfolio, so we did a lot of hedging, but we didn't add enough longs to cover the hedges that we added. So if we get $3.30 and we sell 10 of them in the long-term portfolio, the margin is only $1,000. We're going to collect $3,300 on a $1,000 margin. So we're going to make back. We're going to make $300. We're going to make a 200% profit on our margin in 16 months if they're $10. Meanwhile, the worst case is you end up owning 1,000 shares for $670. So $6,700 for 1,000 shares is your worst case against a possible $3,300 gain. That is fantastic use of your buying power. So when I do see now, when I think of something like that, or I talk to somebody like that, then I go and see, do we have some down in our portfolio? Actually, Control F, SPW. Oh, we do. We already did that. I liked it so much I sold 30 of them. All right, well, so it was a good idea. We sold it for $475 at the time, and we were already up $4,000. We're going to be up $14,000 on that trade. So I used that logic at the time, which is back in December of last year when it was low. So where is it? Not Tesla. So the exact thing I'm saying now is what I was doing last year. So in December of last year, we were right about here. We were lower than we are now. We did the same thing. My logic was I said, you know what, rather than messing around with a trade on SunPower, I'm just going to sell the $10 puts because that's my target. So we sold 30 $10 puts, a decent commitment to buy 3,000 shares at the same. Well, in that case, it was $4, so I think for about $6 a share. So we sold them there, and now we have them when we're in it. So that's basically that's the position I recommend, certainly the one we have in the long-term portfolio. And whatever amount you're comfortable owning, of course, in the long-term portfolio, we got no problem owning $16,000, $18,000 worth of SunPower. That's not an issue. So we already did that one. Is it in the options opportunity? It's also such a good one. We should do it in the options opportunity, except I think OOP. Oh, yep, it's already in the options opportunity. Now here, we only sold 20 puts. See, here we took the more conservative view because it's a smaller portfolio. So we only sold 20 of the $7 puts for $255, same time-ish, and we picked that up at $255. Then we bought the 5-10 spread. And the net of that, you see, I was 95 here, and these two add up to like 95, so we paid net zero for this spread. So if SunPower is over 7, we're going to make at least 30 times 2, $6,000 minimum there. But you see, I was way more conservative. We paid net zero, and our worst case scenario is buying 2,000 for $7. So we took a more conservative approach so there you go. If you look in the options opportunity portfolio, we took a much more conservative approach. And in the long-term portfolio, we took a more aggressive approach. And the options opportunity portfolio is already up $6,000. And the long-term portfolio, this is an interesting comparison. And in the long-term portfolio, we're up $4,400. So the more conservative one is doing better at the moment. And in the end, the most we're going to make is $14,000 here and $15,000 in the long-term portfolio. They're such interestingly similar trades that were traded in a different style based on the size of the portfolio and how much risk we were willing to take on. So that's very interesting. We actually completely covered that one. All right. 46.30 went on oil, so be careful. Oh, thanks. That's how to get rich slowly. Great. If someone establishes a butterfly portfolio, should they have hedges? The butterfly portfolio is essentially self-hedging. So the answer is no. It's a standalone portfolio, and the positions are generally extremely conservative. And you know, we're selling both sides. We're selling puts and calls. So when it goes down, we make money. When it goes up, we make money. It is not crash-proof, though. So if there's a massive market crash, it'll lose 20, 30% just like any other portfolio in a really bad crash. But, you know, you just get back on the horse, basically, if something like that happens. You can lose a year of gains, basically, in a market crash. So you have to be careful. But, again, we keep so much cash in the portfolio, we would basically take advantage of a market crash. So the cash is kind of a hedge, too. And don't forget that having cash on the sideline is a hedge, because let's say the butterfly portfolio, for example. It's a $300,000 portfolio. We have $300,000 in cash. It's almost all in cash. And yes, we have obligations to buy the stocks, but the obligations are just like with SunPower, to buy them at substantial discounts if we have them assigned to it. So if the market crashes, let's say the market drops 30% or 20%. Let's say the market drops 20%. And our positions lose, let's say, $60,000, $70,000, okay? So we're down $60,000, $70,000. Now we have $240,000 left of buying power. But the stuff we want to buy has been discounted by 20%. So the stuff we want to buy is now $220,000. In other words, it was $300,000 worth. The market dropped 20%. Now it's 20% of that. I'm sorry, $340,000. So even though we lose $40,000, $60,000 in the portfolio, we're actually even because the cash now has more buying power to buy stock back. So that's another thing. People don't realize that. You got to think of it as a closed-loop system because what were you going to do with that money anyway? You were only going to buy stock with it anyhow. So therefore, if the stock gets cheaper and you still have your money, you're fine. Even if it's less money, you're still fine. That's why people they kind of tend to overhedge because they don't think of it that way. But you have to consider, what were you going to do with that money? You were going to buy stock. So if the stock gets cheaper, you take the money and buy stock that's cheaper. And then later on when it comes back, you make money. And believe me, that was a life and death thing in 2008. If people did not understand that, they lost their assets. The people who understood that, they got more money. Like Warren Buffett got out of his chair in 2008 and started buying things like crazy. You know, because he's like, that's why he had all the cash. He was waiting for the market to crash. That's why we have all the cash. We're waiting for the market to pull back so we can buy stuff. And there's plenty of things that are cheap. Like Macy's, like Limited Brands. I just said Limited Brands might be our stock of the year next year. I was talking on the TV about that, or radio, or whatever else. There are certain stocks that are just ridiculously cheap, and those are good to buy, especially in the retail sector. There's a lot of good stuff like that. Some of these oil companies are going to start getting cheap also. Wait. You can take my loss on oil, apparently. Watch. Trade, active trader. Yep, see, I don't like that. That's not pretty. Done. 1, 2, 3. Should I keep the other 2? I'm going to keep the other 2. I still think it'll come back. So I'm just going to keep the 2. And that, see, now if we go back to 46.50 or whatever, or 45.75 or whatever it is, if we go back down now, I'm going to be happy to add 2 more again. And then I'm back where I wanted to be. I've got a good position cheaply. So if it pulls back now, I actually would be happier if it pulls back now than if it goes up. If it goes up, obviously I'm going to be like, oh, damn, I sold all those contracts. So I would actually rather if it now continues and tests this line again, the 45.90 line, and I'll be happy to add 2 more there. So we'll see how that goes for the rest of the day. But meanwhile, congratulations to anybody who came in with me. That's a $250 per contract gain from where we started. And we stopped out. So officially, stopping out with $250 gain. You guys missed all the suffering that I went through, that's all. I've been with Bill for years. Monday, the report is over. Yeah. Yeah, I mean, it's just, and again, when I say I'm not going to work Mondays, it doesn't mean I'm not going to stop by and chat and things like that. I'm just not going to be on call all day. I'm going to try to make more, for PSW Investments, I'm going to have more appointments, and I'll be, like, going out and actually meeting people and doing stuff instead of sitting at my desk all day. And I will take more 3-day weekends, though, because I love 3-day weekends. I get bored after a week, but 3 days I'm very happy with the weekend. I can go somewhere. What's the best hedge to have now for the OOP portfolio, SQQ, TZA? What about SDS? Would the best longs be for... Wow. The hedges, look, we have SQQ and TZA, one or the other. I don't like shorting the NASDAQ because Apple's in it. I mean, we do short the NASDAQ, but I'm just saying, I mean, if I had to pick one, I'd say pick the one that doesn't have Apple. Because Apple's a fantastic company. They're releasing a phone. And you know, we were just talking about how it shouldn't be a $1 trillion company because where's the money going to come from? That won't stop it from getting that number. And if Apple goes up because they sell 1 trillion iPhones or whatever the number is going to be in the new cycle, then the whole NASDAQ will follow it up because the companies that sell to Apple will go up. The companies that the retail sellers that sell Apple will go up. Best Buy just had a fantastic numbers today. So you'll see a big flow in the NASDAQ from Apple, and Apple's a big part of the NASDAQ. It'll drag the index up. So, you know, we don't want to bet against it. If Apple, on the other hand, if Apple collapses for some reason, you damn well better have a NASDAQ hedge. Otherwise, everything can go to crap. Because Apple's also in the Dow and also in the S&P. So therefore, the diversity for us is to bet on the SQQs, but also bet on TZA, where it doesn't have Apple or any other big caps. So those are two very diverse ways to hedge, and then we like them both. The other ones are redundant because first of all, Apple's in the Dow, it's in the S&P, it's in the NASDAQ. It's heavy in the NASDAQ. So that makes it the worst thing to short if that's the only thing you're going to short. But TZA is small cap, and if your portfolio is not small cap, then what the hell are you doing? You got to look at your portfolio and short for what that is. And in the OLP, we have a mix and such that we decided to short TZA and the NASDAQ. And what's the best longs for new money in the FTP? Well, that's easy because we say new there, right there. Is this the OLP? Nope, it's too big. Wow, what is this? It's the LP. Oh no, this is the OP. Okay, there you go. So new. Okay. So watch in the no butterfly. Wait a minute. What the hell? Just did. Stop that. OOP. Okay, here you go. See this? Good for a new trade. Oh, I'm pointing my finger. Good for a new trade. Good for a new trade. Very simple system, right? Good for a new trade. That doesn't say good for a new trade. Good for a new trade. Very simple system, right? So there you go. Those are the ones that are good for a new trade. And in the butterfly portfolio, in every portfolio, I tend to say good for a new trade is something good for a new trade. So those are my favorites. And then my real favorite, if you're starting out right now, is to wait. Be patient. There will be more trades. We will come up with trades every day. Not every day, but I mean every week we come up with trade ideas and we add them in the portfolio. Let's see. Oil, where do you think is a high? Might be blah, 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 before you go short. Oh, I wouldn't go short until it gets to like 50. I mean, maybe 49, 48.50. Let's say 48.50 would be the lowest I would want to short, and that would have to be something I think changes. Like, if we go to the holiday, after this weekend, if oil still can't even get over 47.50, I might change my mind. But into the holiday weekend, I really wouldn't want to short unless you get up like 48.50 or higher. All right, but after the holiday, they're back to having problems again. But we'll see how the inventory is. Now, what do we know for sure is going to happen? The inventory report this Sunday, it cuts off Saturday night, I think, the counting. So what's the impact this week? Very low input to refineries of oil. So you're going to have but also low use in the Houston area, all that area where people are stranded, no cars, no planes, so on and so forth. You have a low usage and you have a low refining output, but there'll still be more refining probably. There'll be less refining than there is use. So there'll be a drawer in gasoline, a drawer in other fuels, but oil, since the refineries aren't using it to make anything, is going to pile up. So it should be probably not this report Wednesday, because this report Wednesday only goes through Sunday. You're not going to see a big impact from the storm. The impact from the storm comes in next week's report. Next week's report is going to show a huge build in oil. And the question is, are people going to forget already that they already sold oil off based on that, based on the fear that's going to happen? I don't know. So it's tricky. You're going to have to play it by ear. It's not something you can just say, oh, here's what's going to happen. There's too many possibilities of where it could go, and it depends on what this week's report is, so on and so forth. On Thinkorswim CL, I could not see buy orders, and the volume to CL was half of yours, 14.6K. No, I have no idea. I don't know. I'm on CL. I'm on the straight CL on Thinkorswim. It's possible you're looking at a different contract. But I couldn't tell you. You have to call them and ask them why there would be any variation in that. Any thoughts on IMAX? IMAX, yeah, I think IMAX is stupidly low. That's one we already have and we've already added to, so I'm not looking to push it or anything. This has been a horrific season for movies this year. is doing that, and last week was like the worst week in 12 years of box office. But if you look at what's out in the movies now, you can see why there's nothing to see. And this weekend, I don't know why, and you're going to see some really weird stuff going on. I don't know why, but for some reason they decided not to make a blockbuster movie for Labor Day. They never do that. So they're tanking the box office. And IMAX, of course, they live and die on the blockbusters. But this is just insane. Going 50% haircut on this is just crazy. And they should certainly be trading at least in the 20s. So I love them down here. I think they're a fantastic opportunity to buy. We already have trades on them. Oh, good. Oil went down. I feel better. All right. I wouldn't have been happy if they went straight up. So with IMAX, it goes back to the same thing. I certainly feel very good about it. They don't have long-term options, unfortunately, but you can sell the $18 puts for $1.90-ish. So that's the March $18 puts for $1.90. That would put you in for $16.10. So that's really good. And then if you want to take a bullish position on it, I would go with like the what was that here? 16s. That's not so bad. I'd pay $3.50, $3.60 for the 16s, and then I want to get like at least $1.60 back, so I'd sell the 20s. So I would go with the 16-20 spread at $3.60 minus $1.60-ish, so that's like $2. And if you sell the 18 puts for $2, or for a little less than $2, you're going to have a net almost zero trade on the $4 spread. And your worst case scenario is you own IMAX at 18, which is where it is now. All right, so if you don't mind owning IMAX at 18, you decide how many shares you don't mind owning. Then you set up the spread. You have the 16-20 spread. So even if it's only at 18, you're still going to make $2 a share. And if it's at 20, you're going to make $4 a share, which is better than you would do obviously if you bought the stock for 18 and it went up $2. So it's sort of a win-win-win. So almost nothing bad. Certainly nothing worse can happen to you than if you own the stock, and there's many positives that can happen to you. And that's how we like to set them up. We like to use the options to take advantage of the premium that we can. Why on 2019 instead of January 18th you can sell for 208 and much more liquid? You can do that. I just prefer to go out to 2019. I mean, for me, I'd rather get the extra buck. Well, it wasn't a buck though. It's only, you're saying it's 40 cents. If it's only 40 cents, no, you're right. If it's only for a small difference, if I'm remembering correctly, it was $2.50 for the short puts, then you are correct. It is a better play to sell the January one because it's not worth giving them another year for 50 cents. That doesn't make any sense. So the only reason was I didn't see that. So if that's the difference, then that wouldn't make sense. SEWR. So you're saying, what puts were we talking about selling? It was a 10 put though, wasn't it? Wait, January? Oh, here's January. Yeah, the 10 puts no, I take that back. These $10 puts let's say they're 210, doesn't matter. But these $10 puts are not 210, they're 330. So it's not a little bit of money, it's another $1.20. And I would rather have the $1.20 up front. I would rather lower my basis. It's not just $1.20. You're lowering your net basis from $8 to $6.70. So how much lower is that than $8? Okay, it's almost 20% lower. That's plenty of money. And you're getting yourself an extra cushion, and also your assumption is that you will be able to sell a year from now, that you'll be able to sell, or not a year from now, in January, that you'll be able to sell those same puts again for $2 or $3 and make more money. But what if SunPower flies up and is $12 by then? Then that price will no longer be available, and then you will sell it for less money. So for me, it's a good price. I can lock it in right now and be done with the trade. And again, a lot of the trading decisions we make is I don't want to worry about it. I want to buy and forget a trade. We buy these trades for long term, so the more I can buy a trade, put it away, have a nice low basis, and move on and have cash for another trade, the more I like it. So yeah, I'm sorry. For 50 cents, I would have obviously done this, but for $1.50, even $1.30, I think I'd rather have the $1.30. But yeah, there's a validity to playing it your way, but it's just a much more active way to play it, which, I would rather play it safer and less active. You would rather play it risky and more active, which is fine. It's just not the way we generally run the portfolio. So how confident are you DBA will increase? I'm not confident at all. I mean, Jesus Christ. And now Amazon's getting in on this thing and pushing prices down. It's very tricky. Our DBA thing is based on, we think global warming, we think these hurricanes, the weather disruptions, like the droughts, the heat wave, will disrupt crops, and certain things will kick off. Don't know when, can't predict how, but we just like to have it as a constant inflation hedge in our portfolio. But it's certainly not, we always have inflation hedges, but it's not like a stock of the year or anything like that. It's something that we just, generally think is a good thing to have in case inflation kicks in. It's a good way to pay for stuff. Chrissy, can you explain how you cryptocurrencies work and why Bitcoin is in 4K? Yeah, we have on Phil Stock World, we have an entire section for cryptocurrencies. Where is it? I thought we did. Wait. Oh, wait a minute. That's not right. Somewhere around here we do. Zero hedge, insider scoop, chart, digital currencies. There you go. Everything you want to know is right there. And in fact, Chris, Biodiesel Chris wrote an article really going over all about cryptocurrencies, like a good intro guide to cryptocurrency in this section. So that's what it is. Because honestly, it would take ages. It's like a whole session to go cryptocurrencies. Why is Bitcoin 4K? Because it's also a bubble, but it's possible to sustain it because there's so few Bitcoins really out there. I think there's only 20 million possible Bitcoin. So at $4,000, it's like an $80 billion, all right, 4,000 times 20. Wait a minute. 4,000 times 20 million. 1,000 times 20 million is 20 billion. 80 billion, right, okay. So there's only a possibility of there being 20 million Bitcoins. That's like the whole sequence before it runs dry, before you can't possibly make any more. So 4K is 80 billion. There's a lot of companies, but quite a few companies have $80 billion market cap. So it's just like any sort of company that gets popular and hot and people put money into it. But the thing is, there aren't really 20 million Bitcoins. There's maybe only 8 million or so in circulation. In fact, let's take a look. How many Bitcoins are there? There you go. On in circulation. 21 million. Okay. Oh, there's 12 million currently. So just like a stock, it isn't all issued yet. And now, it's never going to be issued in a diluted fashion, really. It's issued at a very, very slow pace now. They're getting mined, these coins. So there's only 12 million in the world. So at $4,000, although you say Bitcoin has an $80 billion market cap, the reality is it's only 4,000 times 12, which is what, $48 billion. And the rest is just speculative as it becomes mined. Plus it broke up into another kind of Bitcoin called Bitcoin Cash and whatever. Anyway, it just it's sort of a collector's item that took off. It's like Beanie Babies. And I bet if you actually look at Beanie Babies at some point and look at what people, like, if you look at Beanie Babies and you look at how many Beanie Babies have been made and you look at how many people were paying $20 and $100 for a Beanie Baby, you probably would have had the same thing. Instead of like, wow, all the Beanie Babies in the world are worth like $80 billion. But in reality, that's not what happens, because the reason they were rare is because everybody was holding on to them. As soon as people start putting them out in garage sales and trying to sell them and trying to get $20, they all of a sudden realize it's not worth that. So it'll be interesting because they're going to start taxing Bitcoin, especially as Bitcoin broke up into Bitcoin Cash now. So part of the value is in this Bitcoin Cash. That's going to be treated as a taxable event by the IRS, and a lot of people who have these Bitcoins, they have no other way to pay for them other than to sell the Bitcoin. and there hasn't been a real massive selling event in a long time. So it'll be interesting to see how much the value holds as people start needing their money to pay their taxes. But it's really a matter of just nobody wants to sell them and people want to buy them. As long as that happens, you're going to have this imbalance. If there's 100 Beanie Babies if there's 100 people who have 100 Beanie Babies, right? And everyone's got a Beanie Baby of 100 people, but 10 new people come in and they say, "Oh, I want to buy a Beanie Baby. How much?" Then one of the 100 people, let's say they'll pay $10 each, and it was worth $1,000 for 100 Beanie Babies. Now, if one person sells a Beanie Baby, if nobody of the 100 wants to sell the Beanie Baby for $10, and eventually somebody agrees to sell it for $15, then the last Beanie Baby was sold for $15, right? Now, you can say theoretically that all the Beanie Babies that are left, all the other 100 Beanie Babies, are now worth $15 each. But meanwhile, there's only 10 more people coming to buy them. Not everybody can actually sell their Beanie Babies for $15. It's the fact that they don't want to sell is what makes them valuable. And now, the last guy sets the price at $15, and you see the Beanie Baby market goes up, right? So here's the Beanie Baby market. Whoosh, it goes up from 10. Give me a chart of some kind. So Beanie Babies go from, here you go, this nice chart. So Beanie Babies go from $10 down here, and then somebody buys one for $15, and now the chart goes like this. It goes from 10 to 15. And then all of a sudden, now the next person comes in and buys them for $20. And they say, "Oh, look at Beanie Babies." Now Beanie Babies have doubled. And everyone's excited. Now the 8 people who still don't have Beanie Babies are like, "Oh my God, Beanie Babies just doubled, and I didn't buy one." And so some guy runs in and says, "I'll give you $25. And then somebody gets 25, somebody gets 30, somebody gets 40. And so now the 10 people who wanted to buy Beanie Babies paid between $20 and $40, or $15 and $40 for their 10 Beanie Babies. How much is that? Let's say it averaged out at $25. So they put $250 into the Beanie Baby marketplace. But the last guy bought a Beanie Baby for $40. So now the Beanie Babies are valued at $4,000. Even though only $250 went into them, they gained $3,000 in value, 10 times more than what actually came into the market. And now you have 110 people, 100 people who have Beanie Babies, 10 people who used to have them but sold them for cash. But now what happens? What if those 110 people who think they have $40 Beanie Babies try to sell them? Then there's a panic, right? Because they try to sell it and they realize nobody, the guys who just sold me the Beanie Baby for $30 doesn't want to buy one back for $40. And nobody wants to buy them back. And now they're just sitting on Beanie Babies that nobody wants. That's all it takes for a market to crash. When the faster something goes up, and especially if you don't see the volume coming in to support it, and this is what I say about the market all the time, when you see a fast uptick and there's not enough volume to support it, you know it's going to fall back. And that's where we are with Bitcoin. Unless the people who have the Bitcoins now are resolute and hold it through thick and thin and absolutely refuse to sell for lower prices, you can get a really quick collapse in this thing. There's very little controls to stop it from falling really hard and fast. So just like anything else, it's just a hot market. All right, there, I explained it. All right, good. Okay, we're on track. No special questions. We have a little bit of time left to go. So where are we? Let's take a look at the future, see if we can find another trade. What's going on? Oh, you bastard! 46.50 on oil. Damn it. All right. Well, that's where I would have been even. So what now? I only have 2 left, so I'd have to get up to like 47 now to break even on the 2 that I've got. But that's okay. Like I said, I'm happy. Just not being down is a win. So I was down 5,000 plus, and now I'm not down. Now I'm down about 1,000, so I'm okay. So now I'd like to make $1,000. So let's see who wants to make $1,000 with me. Let's see if we can do that. The Russell is going back up, so there's no good shorts here. I'm not really inclined to go long in the market. Damn, that was a nice $500 move. Let's see who looks good. So now speaking of volume, look at the kind of move we got here today. And it's been since the morning. We've been going up and up and up, right? So now the question is, how much volume was that? So we go to Yahoo. We look at the S&P. Now I use SPY. It doesn't matter what you look at as long as you look at something consistently, so you know what the levels should be. And I like this because I get a quick history here. So yesterday, why was the market even open? And again, this is why Mondays are stupid, because this is what happens on a lot of Mondays. There was virtually no trading. 36,000 is nice. Like you can have a holiday is 36,000, and we had it back on August 7th too, which was also a Monday, 30,000. So whatever happens when 30,000 shares are 36 million shares are traded is a meaningless day. It's just 2 robots selling to each other. There's not even people involved at that level. So you can't read into anything that happens on a day like that. Today, it's 2:30, and we're at 37, but a lot of volume comes in right at the end, so probably we'll be up around 50 or so today. It's also not good, but at least it's not ridiculous where you can't even pretend it means anything. So today is like okay, but what are we doing? We're only getting flat, right? I think we're only back to basically flat on the indexes. So there's nothing impressive going on here. 0.2%, 0%, 2%. Yeah, we're up about a quarter of a point maybe. So there's nothing exciting going on here, which means that all of the levels that we had last week, like 21,850, which we're very close to, and 24.50, which we're getting close to, 58.75 here, and certainly 13.85. These are all good shorting spots for tomorrow. Wow, look at gasoline flying again too. So we have to just figure out what's going on. Now, we didn't look at the news, so since I don't see anything obvious here, the next thing we want to do is go check the news, which I don't have up. Seeking Alpha, we can look at their news. I like their news because it's curated by guys who are pretty good at editing the news, and it's also a timestamp, so you know exactly when something happened. Okay, so Freeport, we don't care. GA, Videotron, Delta, I'm just skipping through because they're not important. AstraZeneca does the thing, who cares? Legion, Abbott, wow, nothing. There's nothing going on since we started this webinar. Google meets with the EU antitrust regulators to outline changes. They got fined. Okay, so that's non-news anymore. It doesn't change anything. Exxon is shutting Beaumont refinery. 362 in Beaumont. That's a big refinery shut down. Alibaba invests in cloud. U.S. postpones on lumber duties. That means nothing, basically. Energy shares battered as Harvey, blah, 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 and all the energy companies went down. So here's what you want to do, bargain shopping for things like that. Murdoch pulls Fox News, UK citing lack of interest. That's great. Yeah, because they don't fall for that idiocy in England. Nike shapes up. Macau expected to bounce back from an air typhoon. Nothing. So nothing has happened since we started this webinar. So there's no new information. Now, if there's no new information, then what the hell is the market so excited about? That means now I feel a little more like shorting. What's the bigger picture, though? So now we got to look at Monday's post and go to the calendar. So you think I do this stuff for no reason, but I do it for a reason. You got to lay out the foundations of why. You have to think always in terms of what am I doing this week, and that's why I do these posts. I want to set up all the things that we're watching and talking about and looking at. So on Monday, we put up the calendar, and what do we have tomorrow? We have MBA mortgage. So now we have to think about what's going on. Are there going to be a lot of mortgage applications? Is it a big market mover? Not that big. ADP, not a big mover, but it will give you an indication of jobs. There'll be more people getting unemployed. We're coming to the non-farm payroll report, right? Is it? Oh, no non-farm. Oh, yeah, employment. There you go. So Friday, we have the non-farm payroll report. It depends what day they come up to, but because of the hurricane, a lot of people will not be working. So it'll be interesting to see what happens. A lot of part-time people and such will be essentially out of work if they can't get to work in Houston. There could be hundreds of thousands of extra people, not working that were not expected. So expect job creation to take a tick down and probably a bad number on Friday. But that's no reason to short something tonight. Tomorrow we have, so ADP is not covering itself. GDP report, 8:30 tomorrow. That's obviously a big market mover. Based on the numbers we've been seeing, GDP should be on track to be pretty good. It's probably coming close to 3%. Anything below that's going to be a disappointment, but I think people expect it to be good. Corporate profits, now that's interesting. Those are not going to be as strong as people think. So that'll be an interesting negative. Powell speaks. And then we have the oil report. Wow, this is an interesting bunch of things. So, Fed, Hawk, Dove, Powell. Wait, where's your list? Oh, here we go. Really? I gotta read this? Ugh. Where is Powell? Market Powell. There he is. Centrist. That's why I can't think of what he is. All right. So Powell's a centrist. Right? So there's nothing to be read into that. So we don't see anything that's going to particularly move the markets other than GDP. We don't think that's going to be too strong, but not enough to make a big bet on. But being that we're at a nice resistance point, I don't see the harm. So should it be the Dow or should it be who's the most fun to short now? I think the Dow. So that's going to be my call. Now, this isn't going to resolve itself now. But if I had to pick an index I wanted to short right now, I think I'd go with the Dow. It wouldn't take much for it to have a nice 50-point pullback, and that would pay like $250. So I'm going to go check out YM. And hopefully we can get up to 21,850. And see 21 now, by the way, we haven't had a big pullback, so 21,650 to 21,850 is a 200-point run. We had a little bit of a pullback here to 21,800, which is what you expect off of this run. So that would be a fairly strong pullback. So here we only expect maybe a weak pullback, which would be from a 200-point run about 40 points, so about 40 points. So we expect to get back to 21,810. So that's our goal. Our goal is going to be to get down to there. We're at 40 now, so that would be 30 points at $5 a point. It's going to be $150. And the closer we get here, then we have closer, here. So in other words, it would be 31 points, 32 points. The closer we get to 850, the better we feel about the short. So we're going to wait to see what resolves. And by the way, this is how the futures trading is. It's very tedious. It's not exciting. You have to wait and see if your setup comes in and the premise pays off. Now, the S&P sharp is over its lines here. The NASDAQ is testing its line. So if the NASDAQ goes over, you want to stop out. And the Russell is over at 85. If the Russell goes over 85, you want to stop out or not take the trade at all. So at the moment, I don't want to jump in. I want to see what actually happens as they keep going up. On the other hand, if the S&P fails, if he fails that line, if the Russell fails his line over here, then I want to catch the short. But at the moment, I'm thinking we're inching up here very, very slowly. I really, really don't want to get started unless I'm sure I have to. So 845, I'm watching real closely there. Interesting. 845, 842 is the last three digits here. They're practically at the same place as far as that goes. 846, he's going up. If he's going up, then he should be going up. 847, he's going up fast. Oh, and he's going up fast. 848, 849. I want to see it get rejected now. I don't want to see it making 50. Oh, 85. 849. This could be it. 85 again. Oh, big move. Oh, damn it. Too slow. Come on, one more chance. Give me another chance. I won't blow it this time. Damn it. Oh, wait, 85 again. Come on, one more punch up. Come on, Dow, you can do it. Nope, 849. Rejected once again. Ah, he's not going to make it. Damn it. All right, so we're going to take this one. We got 4 more points out of that. Now, if it goes higher, I'll add another one, but I'm not going to add another one otherwise. Let's stick with the one I got. So 848 is the best I got last time, so that's kind of my goal right now. Now, if I get to 848, I still want 44. That means my average will be 46. So I could live with that. But I think that might have been it. I think we kind of nailed the top there. So what was my premise? The volume is low. There was no news to drive it higher, which means this whole move is just based on, basically bullshit. And so therefore, I don't expect it, because there's nothing pushing it, I don't expect it to break through any serious technical levels. And I have 2 things here that are confirming. He's at a technical level, he's at a technical level, he's at an 85, which I know is usually a good spot to short, and he's at my 2450 is up there. But, the S&P also, they all show signs of slowing down. So, I have a premise that I expect to see some weakness, that this probably shouldn't be, as the market probably got overexcited. Yesterday, we had a really nice sell-off at the close, remember? Like yesterday, after the bell, we dropped like a rock, but that was because of the Korea thing. So, I don't expect them firing another missile, but you know what? I shouldn't meet with like Kim Jong-un and say, look, if you want to make $1 billion, give me a few $1 billion and let me bet, and you tell me when you're going to launch the missile, and I'll put the shorts on. Because holy cow, what a great way to manipulate the market if you're like a dictator, right? Just cause some trouble, lay down some shorts, cause a little trouble. I imagine this guy, if he put down a few $1 million, if he put $20, $30 million, he can get his hands on that kind of money. He could have tripled it easily. If you know for a fact that you're going to press the button and launch a missile, then you can make pretty safe bets. So that's a good scam. Anybody wants to go to North Korea and propose that thing, we can turn this into something exciting. All right. He's at 85. This is not going well so far. He's still under. He's at 46. I don't like the way he's going. He's at 48, which is where we said we were going to take another one, but I don't like him at 85. He's over. Yeah, tempting. All right, let's do it. Oh, it didn't take it. Shit. I waited too long. Can't hesitate. I said, don't give webinars. I'm talking instead of clicking. It's not good. See, it did exactly what I said it would do. Though it went back to 8. It went back to 48, and then it just lasted there for another second, and then came back down. And he poked over. He tricked me. He poked over for a second, but he didn't hold it. So we still only have the one short contract. And by the way, this is very important discipline in trading. You don't say, "Oh, I don't care. It's only $20." It's $20 every time. If you say, "I don't care about $20 10 times," now you don't care about $200. You got to care. It's a terrible habit to get into to not actually, stick to your guns. If you want to short at a certain position, then you wait and you short at that certain position. And if it doesn't get to it, don't do it. There will be another trade tomorrow. There'll be another trade 10 minutes from now. If you look at it again, there's always something to trade. Don't trade when you don't have a good setup. That's the simplest way to put it. Just you gotta get exactly what you want, and if you don't get exactly what you want, walk away. All right, so now it's going to be boring. I don't think anything devastating is going to happen. We'll see what happens for a few minutes. That's all. So that's my trade. So shorting the Dow is my next trade. Nobody has any comments? Great. Easy. And so there's nothing going on. Everything's nice and dull. And so what's my premise for shorting? Like I said, low volume rally. There was a pretty big move in the Dow. We were all the way down to 650. So 200 points. It doesn't look it because we were down 200 at, before the market opened. Then we shot up almost 100 points into the opening bell. So we started the day down like 50 points from here, and now we're up 50 points. Not for nothing. North Korea did launch a missile. We are still in a serious situation. But the market has decided to shrug it off. All right, so things could. Here's the thing: things can't really get better because we're already ignoring the bad thing. So nothing. That's my logic here. Nothing's going to get better because we're ignoring the thing that happened now. Here's where we were before North Korea launched a missile. Here's where we are now. We ignored North Korea launching a missile. We're back to the high here that we failed at. So I like having a short at the high that we failed at. Wait, I'm going to get my 48. Oh, come on. I can get 2 points. Anyway, so we're back to the high we failed at. We don't expect any really good news, particularly on ADP. We don't expect there to be great news in the mortgage information tomorrow, and we think GDP is already priced for a big win. I think expectations for GDP are high, so it's better chance of missing than winning. So for all those reasons, that's my premise going into tomorrow morning that I think the Dow might pull back. And so we'll see what happens. So if it's in my favor, I don't want to risk the GDP report. So if I can make $250 a contract in my favor, I'll probably take it off the table. If it's against me, I'll probably add a couple or whatever and see what happens on the GDP report. But if I'm already winning and ahead of the GDP report that I don't know exactly what's going to happen, then I would rather take the money and be sure I've got a profit. All right, so we'll talk about this tomorrow morning also in member chat and talk about where we are. So it's like this morning at 5 o'clock in the morning, I was like, okay, I think we're done going down. Where is 5 o'clock in the morning? Here. Right here is where I called a turn on the market. So, it's like, and that's what you got to do. If you want to take the future seriously, you should be up at that time trading and looking at it. That's why actually when I retire, I'm probably going to move to Europe because if I'm in Europe, I can trade the U.S. futures. But over there, at 3 o'clock in the morning, it's already 10 o'clock. I'd be sitting there having a nice relaxing breakfast, trade my futures, be done by lunch for my whole day. So pre-market trading is way better. Pre-market futures trading into the open and the announcements in the morning, that's the best time to trade the future. So it's much more exciting, much more easy to read, much less volume, so you don't get swamped by weird stuff. People are not making crazy statements. Like the president doesn't talk usually before 10 o'clock. The president doesn't usually announce anything or say anything. He tweets sometimes, but that's something you can see very isolated. So that's my favorites. So we got our Dow contract. We'll see what happens. And those are my reasons, and that's my premise. So tune in later. All right? But we had a nice win on the oil. Now we'll see what the Dow does, and that'll be it for this week. All right? Thank you all for coming. I appreciate it, and we'll do it again next week. All right? Take care.